So question 23. A manufacturing company uses 25,000 components at an even rate during a year. Even rate means in each month the same units will be consumed. Let's say per year 365 units. So per one day they will be consuming 1 unit. Each order placed with the supplier of the component is for 2000 components, which is the economic order quantity. Economic order quantity means EOQ. You are having the units as EOQ equal to 2 DCO divided by CH. Then the company holds a buffer inventory of 500 components. The annual cost of holding one component in inventory is rupees 2. Before doing this, I will tell you this. I will put all the months: January, February, March, April, May, June, July, August, September, October, November, December. Now let's say your EOQ will be 2000 and per each month you are purchasing some EOQ. So let's say for January that is 2000, February 2000, March 2000, April 2000, May 2000, June 2000, July 2000, August 2000, September 2000, October 2000 and November 2000, December 2000. Do you carry a inventory more than 2000 per month? No. And do you think that you will carry 2000 inventory in a month? All 30 days? No. Why? Because let's say first day you will consume around 100. So this is first day. Day 1. How much you are consuming? Maybe 100. So day 1 you will be having 1900 bagi. Day 2 you will consume another 100, so like 8800. So if you take per month, average in a month, how much of inventory will be there in the month? So that is 2000, the order quantity divided by 2, that is 1000. Per month, only 1000 of inventories will be there. Per month, okay? But it says annual cost of holding, annual. So what we have to do is get the month cost. Okay, month cost is this. Again, this month cost of this like. But instead they have given annual cost of holding 1 unit. So normally in the year, how much of inventory always there? Average if you taken. So in the month beginning that is 2000. In the last day that will be 0. So if you get that 2000 plus 0 divided by 2000, always average is 1000. So to have 1000 of inventory, average inventory, cost of holding per 1 unit is how much? The cost of holding for 1 unit is 2 rupees. So the answer is 2000. But they say what? The company holds a buffer inventory. What is buffer inventory? Safety stock. Arakshawata kiyala. Safety inventory is there. Buffer inventory. So buffer inventory is 500. Buffer inventory is 500. Buffer inventory will be always there. Doesn't matter January, February, March, everywhere buffer inventory there. So normally 1500 of inventories will be there in the company average throughout the year. So for one inventory buffer 500, so that is into 2, that is how much? That is 1000. So total cost of holding is 3000. So the answer is C. Answer is C for this. Answer is C for this. So that is the question 23. Question 23. Then see question 24. In times of rising prices, the FIFO method of inventory valuation, when compared to the average cost method of inventory valuation, will usually result in which of the following? FIFO means what? FIFO means what? Whatever purchased first will issue first. Issue first. So normally in FIFO, whatever the stock will be in hand, will what happen? Inventory in hand. Inventory normally in hand. In hand were the inventory purchased later. ළඟදිම ගත්ත inventory is there. Not the inventory you purchased few years ago. Because those are already sold. First in, first out. Whatever you have in the hand is the inventory you brought later. You haven't sold that. So when the price is increased, this inventory will be what? Inventory cost will increase. Inventory will increase. Inventory will increase. So inventory will increase means what? Closing inventory. Closing inventory is increasing. Closing inventory increase means what? Profit will increase. So normally if you compare with the average WAC method, WAC method, in FIFO their closing inventory is higher. When the prices increase because closing stock is there, the closing stock will increase. So closing stock will increase means profit will increase. So see the question answer B, a higher profit and a higher closing inventory value. So the answer for 24 is answer B. Answer B. So go for the next one, 25th. A company operates a standard absorption costing system and absorbs fixed production overhead based on machine hours. Based on machine hours, please make sure absorption will happen based on machine hours, not based on units. The budgeted fixed production overheads for the company for the previous year were rupees 660,000 and budgeted output was 220,000 units using 44,000 machine hours. So you have to have the absorption rate for units or the machine hours. That will be for machine hours. So first of all, we'll calculate the absorption rate. Rate per machine hours. Machine hour. So how to calculate? 660 budgeted overheads. 660 divided by the machine hours. Machine hours 44,000. So you divide this and get the answer. That is 15 per hour, per machine hour. Then what they are telling? During the year, the total of the fixed production overhead debited to the fixed production overhead control account was rupees 590. What is that? That is the actual production overhead. Actual overhead. And the actual output of 200,000. That we don't care. Why? We are allocating the fixed overhead based on what? Based on machine hours. So the actual output of 200,000 units use 38,000 machine hours. So you have to absorb. How to get the absorb fixed overhead? Absorb fixed overhead will be how much? 15 per hour into the actual number of hours. Standard rate, no, this is budgeted rate. The absorption rate into the actual hours. Actual hours will be 38,000. So you will be getting, okay, absorbed fixed overhead will be 570,000. 570,000. But actually you allocated how much? 590. So if you get the actual overhead minus absorbed overhead, you will be getting what? That will be the over or under absorption. So the answer is actual overhead they have debited is 590. Absorbed overhead is how much we have found? 570. So this is over or under? Under. Why? Actually 590, but you have allocated only 570. So this should have been 590. So which means 20,000 less has been absorbed, but actually 20,000 more should be allocated. So which means under allocated. So the answer for 25th question is answer C. Answer C, that is under absorption of 20,000. Under absorption of 20,000. Then we'll go for the next question. What is that? Question number 26. Question number 26. Question number 26. When comparing the profits reported under absorption costing and marginal costing during a period when the level of inventory increase, what will happen? What will happen? You know this. Inventory increased. Inventory increased. Because of that, closing inventory increase. Closing inventory increase means profit will increase. You know this. We have done several questions. If the examiner will get to know you are weak in this, they will put more questions. Why? We have to get the student into the track. The chartered accountant student should be an all-rounder who knows all these areas. That's the reason. So these are very important things when you go for the practical world. Right? So inventory increase means closing inventory value is higher. In where? In absorption costing. So in absorption costing, closing inventory is higher than marginal because of the fixed production. So what happened? So see, when the level of inventory increase, first one absorption costing profits will be higher and closing inventory valuation lower than that is not there, no. Absorption profit will be higher, but the inventory also should be higher. So go for the number B. Absorption costing profit will be higher and closing inventory valuation higher than those under marginal costing. That is the answer. Answer B. Answer B. So the third one, marginal costing profit will be higher and closing inventory valuation lower than those under absorption costing. Marginal costing profit will be higher. Those are wrong answers. 27th question. 27th question. Which of the following are problems in using net present value to appraise an investment? Appraise an investment problems. What are the problems? Appraising an investment. We'll go to the first one. The difficulty of estimating future cash flows. Yes. That is a problem, very difficult to estimate. The difficulty of selecting an appropriate discount rate, is that easy? No, that is also difficult to get the correct discount rate. It does not take account of inflation. Is that? No, it will get the inflation also. That is incorrect then. So when you get the first one, second one, third one, fourth one. So this is correct, this is correct, this is incorrect. The next one, the concept of net present value is difficult for non-accounts to understand. Yes, it is a disadvantage. Yes, problem. That is a problem, yes. But this is not a problem. Why? It does take the inflation. You cannot tell it does not take inflation. Maybe in your level that is not there. But in the higher level, in the corporate level, when you pass this exam and when you come to the corporate level management, advanced management accounting, CL2, and when you come to the strategic level, the corporate finance and risk management, SL2, all these lessons are there in more complexity. That is good that if you learn now this. So 26, the answer 1, 2 and 4, that is answer C, 1, 2 and 4 only. Answer C. Then go to the question number 28. Question number 28. What are the disadvantages of the payback method of investment appraisal? That also there are the three. What are the disadvantages of the payback? Disadvantages, it tends to maximize financial and business risk. Is that so? No, it doesn't. It doesn't maximize risk. That is a payback. Payback method. Payback method doesn't care about risk. So that is not a disadvantage. It is very complex techniques and not easy to understand. Is it? Is it complex to calculate? Out of all the investment appraisal, that is the easiest way and easy to understand. You can tell to someone, okay, this business investment will be recovered in 2 years. Everyone will understand. So that is also not a disadvantage. Cost 3, it cannot be used when there is a capital rationing situation. Whether the capital rationing is affecting for this? No. You are just looking at in how many years, how many days, how many months you are getting to recover the investment amount. So that is also not there. So none of the above is correct. So none of the above, answer is A. Answer is A. Then go to the question number 29th. Question number 29th. So we'll do here. Question number 29. PH Limited produces a single product and currently uses absorption costing for its internal management accounting product reports. The fixed production overhead absorption rate is rupees 34 per unit. Opening inventory for the year were 1000 units and closing inventories were 180 units. The company's management accountant is considering a switch to marginal costing as the inventory evaluation basis. See, the examiner is always testing for the marginal and absorption because most of the students will not identify the logic. But now you know the logic. You can tackle these questions at the real exam. Don't worry. If marginal costing were used, the marginal costing profit for the year compared with the profit calculated by absorption costing would be, if marginal costing were used, means when there is a higher inventory, when the closing inventory is higher, what will happen? Marginal costing, profit will be getting lower. You know that. I have explained. Right. So we will have to calculate the inventory difference. Inventory difference is how much? Inventory difference is how much? In opening inventory 100, closing inventory 180. So 180. So inventory difference is 80. 80 minus inventory, which means closing inventory is higher. We'll say like 80. Now they are not asking about the absorption costing. What I have explained, absorption costing. In marginal costing, what will happen? When the closing inventory is higher, absorption costing profit will be higher. Then the marginal costing profit will be lower. Other way. Then they are asking what will be the profit difference. So 34 is the fixed production overhead. Absorption rate 34. So 80 into 34. 80 into 34, how much? $2,720. So this is higher or lower in marginal. In absorption costing higher, but they are asking for marginal costing. So in marginal costing this is lower. Then the answer is answer A. Answer A. Then the question 30th. Question 30th. Question 30th. Which of the following statements about overhead absorption rates are true? Now, Silamai, in the middle of 20 to 30, you had some theoretical question. So, maybe in those you can do quickly and save time. Right? Which of the following statements are about overhead absorption rates are true? So, you have 4. First one, they are predetermined in advance for each period. Correct or wrong? Correct. Predetermined? No. Correct. Second one, they are used to charge overheads to products. Yes, that is the objective of charging overheads to each product. Yes. Third one, they are based on actual data for each period. Is it based on actual data? No, we are basing that on budgeted data. So this is incorrect. This is incorrect. So then the question, the fourth one, they are used to control overhead. Is it used to control? No. Control you can maybe tell as standard costing, but not this. So the correct answer 1 and 2 only. Answer will be A. A. Then 31. The following data is available for department X for the latest period. So this is same type of question in the 25th question. The budgeted production overhead given, actual production overhead given, budgeted machine hours given, actual machine hours given. Which of the following statement is correct? So first of all, you have to have the absorption rate. Absorption rate, right? So absorption rate is how much? Budgeted production overhead given 165,000 divided by budgeted machine hours given 60,000. So absorption rate is per machine hour, that is, so this divided by this 2.75 per hour. Then you have to find out the absorbed overhead. It says the answers are for the under and over. So absorbed overhead, how to have? Absorbed overhead 2.75 into the actual number of hours. So actual number of hours are actual machine hours 55,000. So 2.75 into 55,000, that is 151,250. Then how to calculate the over or under? Actual overhead minus absorbed overhead equal over or under. absorption. So this is actual overhead how much? Actual overhead 165,000. Absorbed overhead 151 250. So the difference between these two will be the over or under. 13,750. 13,750 under or over. Actually should have absorbed 165 but only absorbed this. So this is under absorbed. This should be absorbed but they haven't. Under absorbed. So under absorption. So the question answer is B. Answer is B. Under absorption is 13,750. Go for the question number 32. Question number 32. A cost center uses a direct labor hour rate to absorb overheads. Data for the latest period are as follows. Budgeted overhead given, actual overhead given, actual direct labor hours given, overhead under absorbed given. How many direct labor hours are budgeted to be worked during the period? In this case, what you have to do is, you have to write all the formulas you know from this. What you know, the formulas, write with me. Write with me the formulas. You know, first one you know how to calculate the absorption rate. Because they are asking the direct labor hours are budgeted. So see, first you write this one, see whether you can find out from that. Budgeted overhead divided by budgeted hours. Budgeted hours. So see whether you have this information. Absorption rate given or not? Absorption rate, budgeted overhead given. Budgeted overhead given. That is given. You can put that. So budgeted to be worked, that is the asking of that they haven't given. Absorption rate given. That is also not given. So you cannot still do this. Then see the next one, what you know. You know how to get what? How to get the under absorption. Under absorption, under or over absorption. How to get that? Actual overhead minus absorbed overhead. Absorbed overhead. Now see what you have. Under absorption given, overhead under absorption given. This is given. Now see actual overhead given, actual overhead also given. So then what you can do? You can find out absorbed overhead. Absorbed overhead. Then if you find out absorbed overhead, how to find out the absorption rate? Absorbed overhead means what? Absorption rate into absorb, see the third one. How to find out absorbed overhead? Absorbed overhead means absorption rate. Absorption rate into actual hours. See whether you can get this. Now you are finding out the absorbed overhead. Yes, this you can find out. Then actual hours, actual direct labor hours given. This is also there. You can find out this. Then you can find out this. Then you can find out this. So first of all, you have to do what? First of all, you have to start with this. This is the first one you have to do. See, under absorption, how much? Under absorption is how much? That is 937. So 937. 937. This is under absorption. Actual overhead, how much? Actual overhead 23,592 minus whatever the answer you are getting will be the absorbed overhead. So how to get the answer? This minus this equal this. So this minus this, see what is the answer? 23,592 minus 93,7, 22,655. 22,655. Then this is done. After this, you have to do what? You have to do this. Second one, this. You have to do this. So absorbed overhead 22,655 equal actual hours how much? Actual hours given 4,925. 4,925. So then you can find out the absorption rate. Absorption rate how much? 22,655 divided by 4,925. 4.6. 4.6. So you know this now. Then go for the third one. 4.6 you have to input here. 4.6 equal budgeted overhead given. How much budgeted overhead? 25,760 divided by whatever the answer you will get here is the answer for the question. So how to get that? This divided by this. Just change this. 25,760 divided by 4.6. That is 5,600. How long we had to go? That is how you have to do. You have to put the formulas you have. Then you have to have the way to calculate that. So this is the answer. This is the answer. So answer for question is C. Answer C. Answer C. Right? So I will remove this part. Question 33. Question 33. A company must decide between two projects. Between two projects means what? Mutually exclusive. Mutually exclusive. So you have to choose only one. Between two projects, so project alpha and project beta, the profit that might be generated from each project are as follows. Probability given, profit given. So you have to know this. So what is this actually? This is expected value. Value into probability. Probability equals what? Expected value. Expected value. So you have to calculate separately for the alpha and beta. For alpha as well as beta. Beta you have to calculate. So for alpha 50,000 profit, 0.5 probability. 50,000 value into the probability. Then again the next value into the other probability. The total of this is the expected value, expected profit. 20,000 into 0.5. So this into this 25,000. This into this 10,000. Total of this is 35,000. Beta. Profit 60,000. Probability is 0.6. 0.6. Then this is 10,000. Probability is 0.4. 16 to 0.6, 36,000. 10,000 into 0.4, that is 4,000. So this probability, total expected value is 40,000. From these two, whatever is higher is this. So what is the correct answer? Now tell me if these are not mutually exclusive. This says decide between two. No? If you can invest in both, will you invest in both? Yes. Why? Because this also generated a plus, this also generated a plus. But it asks you to decide only one. So in that case, only the project beta. Both projects can be selected if these are not mutually exclusive. If when they put decide between two projects, answer is only beta. If they don't put that word, that only word if they don't put, then the answer should be both projects. So the answer for this is project beta, that is answer B. Answer B. Then 34. Budgeted information relating to a department in JP PLC for the next period is as follows. Department, so A given, production overhead, direct material, direct labor, all are given. Individual direct labor employees within each department can differ rates of pay according to their skills, grade and experience. What is the most appropriate production overhead absorption rate for department? What is the basis here? Different salaries. So in that case, what you have to do is, you have to based on what? You have to do based on direct labor hours. So the basis here should be direct labor hours. Direct labor hours. When there are different salary cost, then you cannot go for cost. If the cost is same, then okay. So absorption rate equals to budgeted overhead divided by direct labor hours. Budgeted overhead is how much? Production overhead given 18,000. Direct labor hours given 25,000. So answer is how much? 18,000 divided by 25. Very easy question. 0.72 per labor hour. 72 per labor hour. So what is the answer? Answer should be C. Answer C. Right? Per labor hour. That is okay. Then go to the question number 35. Question number 35. What is this? Question number 35. Which is worth most at present value, assuming an annual rate of interest of 8%. So, if the discount rate is 8%, what is more value? 100, 2,000 in year 1, 4,000 in year 2, 6,000 in year 3, 1,008 in year 4. So, what you have to do is, you have to calculate. Okay, year 1, year 2, this is net present value, calculating the net present value of a cash flow, discounting. This is discounting. You have learned in BL2 also. Year 1, how much? 1,200. Year 2, 1,400. Year 3, 1,600. Year 4, 1,800. How to get this? Maybe you can get the discount rate, or else you can just divide it by the rate is this rate is how much? Cash flow divided by 1 plus R to the power n. This is no. So the cash flow given. So you don't need to put the cash flow. You have to put others. So 8%. 1 plus R 0.8. 0.08. So what is this? 1.08. 1.08 to the power 1. Here 1.08 to the power 2. 1.08 to the power 3, 1.8 to the power 4. So you have to get the answers now. You have to get the answers. 1002 divided by 1.0 to the power 1, that is 1111. Then 1400, 1.0 to the power 2, 1200. Then here power 3, 1270, 1800, 1.0 to the power 4, 1323. So what is actually this? The what will be you are getting receiving in the year 1, the current value of this is 1111. Whatever you will be getting in the year 2, 1004 you will be getting in year 2, but the current value of that is 1002. You will be getting a value of 1600 in year 3, but the current value of this is this much. But in these cases, the highest one is how much? The highest one is year 4. Year 4. So this is the answer. Answer is answer D. Rupees 1800 in year 4 will be much value. So that is the end of question number 35. So we'll go for question number 36. So go to question number 36. Question 36. Export is one of many items produced by the manufacturing division. Its standard cost is based on estimated production of 10,000 units per month. The standard cost schedule for 1 unit of export shows that 2 hours of direct labors are required at rupees 15 per labor hour. The variable overheads rate is rupees 6 per direct labor hour. During April, 11,000 units were produced. 24,000 direct labor hours were worked and charged. Rupees 336,000 was spent on direct labor and rupees 180,000 was spent on variable overheads. Variable overhead efficiency variance for April. What is variable overhead efficiency variance formula? The same formula for labor efficiency. Same formula for labor efficiency. Variable overhead efficiency variance equals standard hours on actual production. Standard hours on actual production. How much of hours should have been used to do the actual production minus actual hours into what? Standard rate. Then calculate how to do this. Standard hours on actual production. Standard hours how much? Per 2 hours of direct labors are required. So 2 hours. 2 hours. 2 hours for how many units? Actual production 11,000 were produced. So 11,000 minus actual hours how much? Actual hours 24,000 direct labor hours. So that is into standard rate. Standard rate is 6 per direct labor. 6 per direct labor. Very easy, Lama. When you put the formula and insert the numbers, very easy. So see, 2 into 11,000, 22,000. 22,000 minus 24,000 into 6. So that is minus 2,000 into 6. So minus 12,000. Minus 12,000 means adverse. So the answer for this 36 is answer A. Answer A. Then the question 37. Question 37. A contract has been signed by company for 8 million during the financial year 2015-16. The contractor incurs rupees 3.6 million during the year and expect to incur another rupees 2.4 million. There was a question like this before, no? Contract costing. So the customer has agreed to pay 80% of jobs approved and certified, profit to be recognized. Profit will be recognized in a contract costing based on the percentage of completion method. So total cost. Total cost is how much? 3.6 plus 2.4. That is 6 million. 6 million. So percentage of completion is how much? 3.6 divided by 6 into 100%. That is 60%. 60%. Then price charge for 60%. How much? Agreed price is 8 million. So 8 million into 60%. 4.8 million. Cost is 3.6 million. When you get the price minus cost, you will be getting the profit. Profit is 1.2 million. Very easy. 37. The answer is A. Answer is A. Then you will have 38 one. Company Alpha is considering following 4 independent projects for investment. The initial cash inflows required for each project is rupees 15 million. Alpha uses a discount rate of 12% in evaluating project cash flows. The observations made for each project are as follows. IRR of project A is 15%, IRR of project B is 10%. Project C gives a present value of future cash inflows of rupees 18 million. Project D gives a present value of future cash inflows of rupees 12 million. Right. Tell me, what is IRR rule? What is IRR rule? IRR rule is what? If the IRR, what is IRR? IRR is where the net present value is 0. If the IRR is higher than the cost of capital, what is our decision? You have to accept or reject. You have to accept. If the IRR is lower than the cost of capital, you have to accept or reject. You have to reject. So first two in what? IRR, no? So the alpha uses a discount rate of 12%. So project A, 15% is higher than 12%, no? So in this case, project A should be accept. Project B IRR 10%. So 10% is lower than the cost of capital. So this is not going to be accept. This is reject. Then next one will be in NPV. What is NPV rule? NPV rule. If the NPV is higher than 0, you have to accept. If the NPV is lower than 0, you have to reject. If this is equal, you will be learning in future, in the next level, what you are going to do. So in this case, you look at the project C. What project C is telling? Project C gives a present value of future cash inflows of 18 million. So 18 million, initially how much they need? 15 million. So which means NPV is 3 million. So 3 million is higher than 0. This should be accept. This should be accept. The D, project D. Project D is what? D gives a present value of future cash inflows of rupees 12 million, whereas initial investment is 15 million, means this is minus 3. Minus 3. So this is lower than 0. This is rejected. Rejected. So what are the projects, feasible projects in alpha? This is accept, this is reject, this is accept, this is reject. So A and C would be the feasible projects. So in this case, project A and project C, where the answer is A. Answer A. Then question 39. Question 39. On 1st April 2015, a company A purchased 250 kg of a new material X at rupees 48 per kilogram. On 15th April 2015, company purchased another 150 kg of raw material X at rupees 52 per kilogram. There was no material issue between these 2 days, and on 16th April, company issues 200 kg of material X for production. Weighted average cost of this issue they are asking. So how to have, see, 1st April 2015 and also 15th April 2015. What happened? 250 items were there, kilograms, purchased for 48. So which means the value of this is how much? 12,000. Then 150 is purchasing at 52. Then value of this is how much? 7,800. So the total of this is how much? 19,800. How to calculate the WACC? WAC, you have to calculate the total cost of inventory. Cost of inventory divided by number of units. Very easy. If the total is this, how much the 1 unit? So 19,800. So how many inventories? 250 plus 150. That is 400. That is 400. So 1 unit is how much? 19,800 divided by 400. 49.5. 49.5. What is the issue? How much they have issued? They are issuing how much? 49.5 into 200 they have issued. 200. So the value will be 49.5 into 200, that is 9,900. That is 9,900. So this is the value. What is the answer? Answer is C. Answer is C. Then question 40. Question 40. A company invests rupees 400,000 on a machine in year 0 and the net cash inflows from its operations for the 4 years from year 1 onwards is rupees 150,000 each year. At the end of year 4, the scrap value of the machine was rupees 100,000. They are asking the accounting rate of return. So how to calculate accounting rate of return? ARR. That is average profit divided by average investment. Average investment. How to get the average profit? Average profit is the profit, the total profit, that is total profit divided by number of years. Number of years. Average investment, please make sure this plus, not minus, this is plus scrap value divided by 2. This is how you have to get the answer. So here, what is the average profit? Average profit is how much? Per year 150,000. So first of all, you have to calculate all 4 years. 150, 150, 150. That is for all 4 years. But this is the net cash flow. Right? Net cash flow from operation. So in the fourth year, scrap value, net cash flow has been not included. Why? This is from operations only. Scrap value cash flow will be coming from non-operation. So with the scrap value, this should have been 250 in the last year. So you don't need that. Why? For accounting purpose, accounting profit, do you need the scrap value? Are you putting? No. You have to put the accounting profit only. Then the depreciation is how much? Depreciation for 4 years, how much? Investment is 400,000. Scrap value is 100,000. So the depreciable value is 300,000. Per year 75,000. So likewise for 4 years 300,000. So this is 300,000. You get this and divided by 4, you will be getting average profit. So the average profit is how much? 150 into 4 minus 3 divided by 4. That is 75. That is okay. Then the average investment you have to get. Average investment how to get? Average investment is the investment plus scrap value. Investment is 400, scrap value is 100 divided by 2. So then 500 divided by 2, that is 250. 250. So then you can get the answer. How to get? $75 divided by 250 into 100%. So this you can put as 100%. 75 divided 250 into 100%, that is 30%. That is 30%. Right? So we'll go for question number 41. Question number 41. The median and variance of a normal distribution or symmetrical distribution are given. With the above information, you have been asked to compute the z-score for a given value of a variable. Is it possible for you to compute the z-score for a given value of the variable? Is it possible? What is z-score formula? This is z-score formula. What this symbol says, x is the value of the consideration. Then this is the mean. This is the standard deviation. Now tell me which of these you have now. Value of consideration, value will be there now. Mean, no, you don't have. Standard deviation, you don't have. But you have to see whether these can be used or these can be calculated indirectly. How? Tell me, can you get standard deviation? You have what? Variance. What is variance? Variance is this. From this you can definitely get this. So in that case, standard deviation is possible. Right? Standard deviation is possible. Then the next one, what is that? That is mean. How to get the mean? They have given what? They have given only the median. They have given what? Only the median. But they have been telling that this is a symmetrical distribution. So what is a symmetrical distribution? It will go like this. It will go like this. So in a symmetrical distribution, mean, median and mode, all three are in the same point. All three are in the same point. So in that case, median is equal to mean here. So in that case, mean also you can get. So if you have all these, is that possible? Yes, that is possible. So answer for this 41 is answer D. It is possible to calculate the Z co. So question 42. Sample 1, sample 2 given. Which of the following statistic has the same value in both samples? In a question like this, what you can do? Start with the easiest from the answers. What are the easiest? Start with the easiest. What are the easiest to calculate? First one, mode is very easy, no? Mode means which number repeatedly happened in both. So mode in sample 1 mode is how much? Sample 1, 5. Number 5 has occurred 2 times. In sample 2, number 8 has occurred same. So this is not same. This is not same. Then easiest one is median. So sample 1, median is how much? You have to have the numbers. In the ascending order, 1, 2, 5, 12. So here the median is 5. In sample 2, ascending order 1, 3, 5, 8. Sorry. Yes, 1, 3, 5, 8. So here also this is 5, this is also 5. So here this is median is same. Do you need to go for the other two? No. Start with the easiest. If not, you may have to go for the again standard deviation and the arithmetic mean. So for the question 42, answer is median, that is C. Question 43. Question 43. Which investment will decision maker who is a risk taker choose? Who is a risk taker? Risk taker. Risk taker, you always going for the risk. You will only look at the benefit. Right? Risk taker will go for the highest benefit without looking at the risk. Looking at the risk. Risk averse will go to lowest risk option. They will not go for the highest risk one. They will go for a lower one. So in this case, Highest benefit is which one? Best case is 600,000. So that is the risk taker will go. Risk averse will go. Best case 200, worst case higher. Worst case higher is how much? Worst case higher is 200. This is worst case. This is best case. So risk taker will go for the highest one without looking at the risk. They will not look at the worst case. They will only look at the best case. They will not look at the best case. They will only look at the worst case. Worst case is higher. So they know that at least they will get 200,000. But they are not looking at the risk. They will try to maximum. So in this case, risk taker will go for the option C, which is worst case 300,000 minus best case 600,000. So answer is C. Answer is C. 44. Which of the following are non-relevant cost? Which of the following are non-relevant cost? 1, 2, 3, 4. You have 4. First one, avoidable cost. Avoidable cost is non-relevant or relevant? Relevant. Because if the project is taken, that is avoidable. If the project is not taken, that is not avoidable. So that will happen based on the project. That is relevant. That is relevant. Then opportunity cost. Is that relevant or not? Relevant. Why? If the project is taken, there is opportunity cost. That is also relevant. Question 3. Notional cost. Notional cost, it's like nominal cost. Will that be relevant? No. That is not relevant. Sunk cost. Sunk cost means the cost already happened. Will that be relevant? No, that is also not relevant. So in that case, non-relevant cost are what? Third and fourth one. So 3 and 4 only. Answer is D. Answer is D. So then go to question number 45. Question number 45. If one card is drawn from a normal pack of 52 playing card, what is the probability of getting an ace or a heart? What is ace? Asia. Api card gahanawata kiyane Asia dinawa kiyala. Ace. Then heart. Heart එක, you know that. I will tell you. So for this actually you should have some common sense also. Okay? You should have a chartered students who normally plays cards. Then only you know this. Maybe most of the girls will not have this knowledge because you are normally not playing cards. Normally boys, if you go for a funeral, you may have card packs. Then you know this. Right? So 52 card packs. In a card pack, in a 52 card pack, in a 52 card pack, you will have what? You will have clubs. You will have clubs. What are clubs? How many clubs you will have? You will have clubs of 13 clubs you will have. Sinhala you tell as kalabara. Right? Clubs. Kalabara. Then you will have diamonds. You will have diamonds. 13 diamonds. Right? So this is like this. We tell as Ruvita in Sinhala. Then you have hearts. Then you have hearts. So heart will be Harata. We will tell it Sinhala Harata. So this is hearts. Then you will have spades. Spades. What you tell, that will be like this. Bokole. This is scope. We will tell like that. So you will have 13. You will have 13 cards each. 13 cards each from these in a 52 card pack. Then also you will have how many A's? How many Asias? Asia? You will have 4 A's. 4 A's. So 4 A's will be like this. 1 A, then that is a clubs one. Then another A, that is a diamond one. A, that is a heart one. A, that is a spades one. So this is like that. So now what they are asking, if one card is drawn, that should be a ace or a heart. Ace. Ace or a heart. How many A's are there? 4 8s are there. How many hearts are there? 13 are there. But please make sure there is one Ace which includes a heart. So this you have to minus. This you have to minus. Why? This is already included in this 4. This you have to minus. 1A is there with the heart. So hearts 13. Hearts 13, but here we have calculated already here. So which means heart or ace will be there in how many cards? In 16 cards. So the total population is how much? 52. Total 52. So this is the answer. But if you can do this go for the lowest one, I mean if you can substitute this to the other numbers, then you have to go for that. So you can divide this from 4, then this is 13. So this is the answer. 4 divided by 13. So that is the answer. Answer is B. That is 45. 46. So for this, you need some common sense also. Maybe to get you a prize, you may need some of common sense. To get the prize, you may need to score 50 questions. Make sure that you may have to score 50 or at least 49. At least you have to get 98 marks. Make sure. Because this is MCQs. Not like essay type. You have to read the questions, answers, get the correct answer in any way. You don't need to even provide the working. You have to get even to the calculator correct answer. That is correct. Then 46. SLB wishes to sell 14,000 units of its product, which has a variable cost of rupees 15 to make and sell. Fixed cost of rupees 40,000, 47,000 and the required profit is rupees 23,000. Now you know how to get the required profit formula. In marginal costing, you know that. You have learned contribution, you have learned the break even, you have learned the target quantity to achieve profit. Target profit quantity. Target profit quantity. How to get? Fixed cost plus the profit plus the target profit divided by contribution per unit. Contribution per unit. So see what you have. Target quantity is there. This is already given. Then fixed cost given 47,000. Profit given 23,000. Contribution, that is not given. This is not given. So first of all, they are asking the required sales price. Before that, you have to find out this. No. So you have this, you have this, but you have to find out this. How to find out? Get this into this into this. So 47,000 plus 23,000 is how much? That is 57, 67, 70,000. So 70,000 divided by 14,000 equal to X. So how much? That is 5. X equals 5. X means contribution per unit. So contribution per unit equals to what? Selling price minus variable cost per unit. What you have now? You have this, but you don't have this. You have variable cost per unit is 15, right? See, you know contribution now, you know variable cost per unit, you know, don't need this, you don't know this. So to get the contribution of 5, selling price should be how much? Selling price should be 20. So the x equals 20 minus 15 should be 5. So the answer is answer C. Then 47. A unit of product L requires 9 active labor hours for completion. The performance standard for product L allows for 10% of total labor time to be idle due to machine downtime. The standard wage rate is rupees 90 per hour. What is the standard labor cost per unit of product L? 10% of idle means what? 10% of idle means what? 10% of idle means to get 9 hours, to get 10 hours, to get 10 hours, to get 9 hours, to get 9 hours of work. 10 hours will be paid. Will be paid means 1 hour will not work by the employees. So let's say per day you are paying for 10 hours, but 1 hour you are not working. You do the lunch time, you do the gossiping with the others, you are not working. You go somewhere, come somewhere, 1 hour is not working, but the employee will be paid for this. 1 hour also will be paid, but for unit production actually you need 9 hours. So let's say when we come to do the lecture, do you think the total recording time will be equal to the total time we are here? No. Why? Maybe we have to get ready, we have to put the cameras, we have to put the mic, we have to get the pens. So likewise there is a wastage time, that is the idle time. So to get a 9 hour, you have to pay for how many hours? 10% will be idle. So to get 9 hours plus 1 idle time, idle hour. So you will be getting paid for 10 hours. 10 hours paid. So per 1 unit. So per 1 unit, 10 hours paid, 10 hours work, 1 idle hour plus 10 hours. So equal 10 hours should be paid to have 1 unit of production. So then they are asking the standard wage rate is 90 per hour. What is the standard labor cost per unit of product L? So how many hours they need? 1 hour. So they need 10 hours. 10 hours into per hour is how much? 90. So they have to pay how much? 900 rupees. 900 rupees for this. So the answer is answer D. Answer D, that is 900. So then question number 48. Question number 48. Question 48. Nalin PLC expected to produce 200 units of its product. The born in 2013, in fact, 260 units of produce. Expected to 200, but produced 260. The standard labor cost per unit was rupees 700, 10 hours at a rate of 70 per hour. The actual labor cost was rupees 186,000 and the labor force worked 2002 hours, although they were paid for 2,300. Direct labor rate variance. Asking direct labor rate variance. How to put? Direct labor rate variance. Rate variance. How? Standard rate minus actual rate. Actual rate into what? Into hours. Hours. Make sure this one. This is important. Not the hours worked, but the hours paid. You don't care how many hours you will be worked, but you will only care how many hours you will be paid. In this case, working hours and the paying hours different. In the last question also like that. Working hours and the paying hours will be different. In that case, in direct labor rate variance, if you are using the hours worked, your answer is incorrect. So you have to get the correct answer to that. You have to put the hours paid. So standard rate given, that is how much? Standard rate 10 hours at a rupees 70 per hour. So see, unit was, standard labor cost per unit was 700 within bracket 10 hours at a rate of 70. So 70 is the standard rate. Minus, how to get the actual rate? The actual labor cost was rupees 186,000 and the labor force worked 2,200 hours, although they were paid for 2,300 hours. So this is 186,000 is for what? Divided by 2,300. 2,300 into hours paid. How much hours paid? 2,300. 2,300. So how to get the answer? See, 186,000 divided by 2,300. Answer is coming in decimals. 80.869 like this. But if you get the 70 minus that same answer through the calculator and into 2,300, how much you are getting? Exactly 25,000 minus 25,000 adverse. Now see that through the calculator. See that through the calculator. See, 186,000 divided by 2,300, you are getting answer as this. Then 70 minus this, you are getting this. Into 2,300, exactly you are getting 25,000 adverse. Again see that 186,000 divided by 2,300, this one. 70 minus the answer means this 80.86. So you are getting this into 2,300, you are getting 25,000 adverse. So 25,000 adverse, that is the answer. Answer C. Answer C. Then 49. 49. Probability of someone getting through CA executive level examination. This is not now CA executive level, this is business level. Examination is 80%. If he gets through CA executive level, the probability that he will proceed to the business level. So in current level, corporate. Business level is 60%. If he does CA business level, the chance for him to complete it successfully is 70%. Probability that someone will not complete CA business level. So how this is happening? First of all, you have to pass the executive level. Executive level you have to pass. Then you have to proceed for business level. Business level you have to proceed. Then you have to pass business level. So probability of this executive level pass probability is 80%. Then, so if you want to go for this, you have to get the multiplication. 80% multiplication. So proceed to business level will be how much? That is 60%. Again, pass in the business level is how much? Pass in the business level is 70%. So pass in the exam probability, how you can get like this: 0.8 into 0.6 into 0.7, that is 33.6. But they are asking what? They are asking the not getting through the exam. What is the rate? So that is 100 minus 33.6 will be 66.4. 66.4 is the answer. So that answer is answer C. So we are coming to the last question of the paper. Normally you will be writing this last question at the last 1 minute. Like so likewise you are doing this in the last 1 minute. Okay, most of the students. But as I told, if you plan well, normally you will have enough time. So 50th question. So they have given you 4. Which of the following describes the basic standards? So we'll write out all these. A, B, C and D. A means what? A standard set at an ideal level which makes no allowance for normal losses, waste and machine downtime. No allowance. You cannot have any losses. It's like getting 100% marks for the BL6 management accounting. Ideal. Perfect. So this is what kind of a standard? This is ideal standard. B is what? A standard which assumes an efficient level of operation but which includes allowance for factors such as normal loss, waste and machine downtime. If you are writing in examination, maybe because of the time, maybe because you cannot remember something, maybe because your logical arrangement is not correct, in that case you will lose some marks. Let's say you are getting 85% marks. So that is like this. That is what? That is attainable. You can attain this. Attainable standard. You can attain. Definitely anyone can get 85% marks. Then the next one, a standard which is kept unchanged over a period of time. So this is like unchanged. Passing rate 50%. That is unchanged. Every time it's same. Not going to be changed. That is what? So that is the basic standard. That is the answer actually. They are asking what is basic standard? No. That is the answer. Anyway, D also will look at standard which is based on current price level. So because based on the current marks, chartered institute is changing the marks. Not happening like that. But if it is changing like that, that is we call as current standard. Current standard. So in this case, the correct answer is what? Correct answer is C. Right. So we are done with the paper. Please make sure I have told you how to do the paper, how to plan the paper, and get the timing correctly for each question. First 10 questions, second 10 questions, last 10 questions. Likewise, you can divide into the time. So after that, maybe if you have enough time, you again go through and see the question. So that is how you can do. I hope you all will get through this BL6 management accounting paper. I know that you can do within this few weeks, few days, and proceed to the next level, the corporate level. So in corporate level also you have a management accounting subject. So this will definitely help for the next level also all the very best. Take the exam, study well, and go through that. All the very best.